Hi. If you're watching this video, I know that you're here to learn about the basics of life insurance. And I want to thank the Peterborough Public Library for asking me to create this video to share with everybody. Now, my name's John Baynham. I'm the host for the video, and I'm an award-winning financial planner and the president of a company called Retirement Income Group. Today, I'm going to go through some of the life insurance basics. For example, what are the types of life insurance? Who needs life insurance and why? What to do if you don't need life insurance? How to determine, or what are the common ways to determine how much life insurance you need? How to purchase life insurance, and maybe a few ways to get quotes online. So if you're interested in all that, make sure you watch to the end, and the information should be great. So first, we're going to talk about who needs life insurance, or why do you need life insurance? You need life insurance if there are people in your life who are financially dependent on you. Now, most of the time, this is spouses or if you have children. The reason being is that if for whatever reason, the household were to lose your income in the event you passed unexpectedly, they wouldn't be able to maintain their standard of living. They could have issues paying the mortgage, paying rent, affording education, or even just paying monthly expenses. Life insurance protects you so that all of these things are covered off. And what people from experience actually use life insurance payouts for, because I find that's often missing from the conversation, they'll use the life insurance payments to potentially pay off a mortgage. Sometimes it's hiring extra childcare. In many cases, a spouse can't actually afford to run the household and also save for retirement. So even if your spouse maybe makes really great money, they'll use all of that money running the household and, paying for the kids and helping with education, but they don't have enough left over at the end of the day to save for retirement. And your life insurance payout can, in many cases, actually become your spouse's retirement savings and what they're going to live on later in life. There are other reasons why you would need to buy life insurance, which is more of a, not necessarily a need, but a want to buy life insurance, has to do with taxes when you pass away. So when you and your spouse pass away, a lot of times there's going to be a significant tax bill, especially if you own a business, you own multiple properties, or, let's say you have a cottage that you want to pass down to the next generation. All of these things tend to have substantial tax liabilities, and it can be significantly less expensive to buy an insurance policy to pay for these things than to either save the money or to just pay the tax bill out of the estate. You can also run into issues where, let's say you have a family cottage and you want to pass it on to your children. You actually are unable to pass it on to your children because they can't afford to pay the taxes. Or, your children maybe have to take out a mortgage in order to pay the taxes to the government that could be owed on it. For any of those more complex situations, I'd highly recommend, you give a broker or an experienced financial planner a call, and they can kind of walk you through some of the issues that happen with estate planning. But for the purpose of this video, we're just going to go through the first scenario, which is kind of more of the why do you actually need life insurance, is that people rely on your income to maintain the household. Now, the next, I'm going to talk about the different types of life insurance. So there are three types that most people come in contact with when they're either talking to a broker or an agent or even just through life. The three types are term, permanent, and insurance that you get through your employee benefits. Now, the first one I'll chat with quickly is the insurance you get through your employee benefits. Usually, this coverage is owned by your employer, meaning, it means you don't own it. So if you ever leave your job or, something happens in the economy and you become unemployed, you lose that coverage, or the insurance company is going to try and offer you something that usually isn't that great or, not ideal. The other thing is that the employee benefit coverage, or the benefits you get through your employer, usually aren't actually enough if you have kids at home. When you have a whole family and you have a mortgage to pay and a spouse to maintain, a lot of times, especially when they're younger, you do need a substantial amount of insurance coverage once you go through a needs analysis. And I have yet to see somebody's employee benefits in my 8-year career actually be substantial enough for the family's needs. So usually it's not enough coverage, might be 1 or 2 times your salary. In a lot of cases, it's a cap of $25,000. You're going to want to check because every employer is a little different, but there are issues because you don't own the policy, and usually it's just not enough coverage. The other two types of insurance are term insurance and permanent insurance. Permanent insurance is the insurance that you'd normally use for estate planning. So like, how do I pay taxes when I pass away? How do I donate a lot of money to charity? How do I pass my cottage on to my kids? How do I pass my business on to my kids? How am I going to, fulfill an estate freeze? Things like that we want to use permanent insurance for. Permanent insurance in some cases can also be used as an investment. You'll also see things online around something called infinite banking. They do work, but they're for high net worth and high income individuals. So it's not for the average person. I'm considered an expert in this area, and I can tell you like 9 times out of 10, people see stuff online and they come to me and say, hey, I want to invest. This is not for like the average family making, 100K or less. These strategies are designed in many cases, to put like a minimum of $50,000 per year just in life insurance premiums, which is way more than the average family can afford. So you don't even need to necessarily think about these things unless you're a business owner and you have a lot of retained earnings or something along that nature, or you have a very, very large tax rate where you're paying over 50% tax, where using life insurance as an investment or some of these strategies can make sense. But for your average family, you don't need it. It'll actually hurt you in the long run. And it's usually not a good idea to use to pay for things like your kids' education or the down payment of a house. I've seen some crazy things over the years. And just remember that those policies usually pay really high commissions, and that's sometimes why they get recommended in YouTube videos and online by people. A lot of the times too, those videos that you're seeing are from the United States and don't apply to people in Canada. The last type of insurance I'm going to talk about is term insurance, which is the type of insurance most people should have. Now, the reason most people should have it is because it's inexpensive and it provides you a lot of coverage. The thing about term insurance is that it's kind of like worst case scenario coverage. So the idea is you're buying it so that you hopefully don't have to collect the money. So that's why it's inexpensive and they can offer you quite a bit of coverage, because the insurance company doesn't usually have to pay out the benefit. And that's why it's good for these worst case scenarios. So term insurance will provide you with a life insurance contract. Now the contract is usually from the day you purchase it until maybe you're 80 years old, 90 years old, 100 years old. Every insurance contract is a little bit different, but the term is how long that the premiums will stay the same. So if you get a term 10, that means that the contract will renew every 10 years. And oftentimes it'll double, triple, quadruple every 10 years. And the contract will last until you're, in your 90s or 80s, or depending on the insurance company. Like I said, they're all a little bit different. Now you can get different terms. So I gave you a term 10 example. There's also term 20, term 30, term 40. And the longer the term, the more expensive it is. The other thing is that the insurance companies, are kind of expecting you to cancel it at the end of the term, not to maintain it. So usually what we'll do for clients, or even for yourself, if you're purchasing through like an online system, is that at the end of your term, you're looking to, you want to shop around and look for other insurance companies, because if you're healthy, you still might get a better deal. If you're unhealthy, you might be stuck on that renewal schedule from the initial contract. So to summarize that, when you're purchasing term insurance, the actual insurance policy will last until you're in your 80s and 90s in most cases. However, the premiums will only be guaranteed by the length of the term. So 10 years, 20 years, 30 years. They're usually inexpensive compared to other types of insurance, and you can get a lot of death benefit. So it's really great when you have a young family, or you have young kids, or you're with your spouse, and you don't have millions of dollars in the bank. That's usually the insurance policy you want to start with, for sure. As you get older, as you get closer to retirement, your insurance needs might change, and you can do a review, and maybe using some permanent insurance to pay for a funeral or whatnot might make more sense. But for the average family, you want to look at the vast majority of your insurance being term insurance. And if you want some permanent life insurance, maybe to help pay for a funeral because it'll be cheaper while you're younger, you can look at that as well. The next section, and I gave a bit of a segue there in the last section, is a little bit just on the cost of life insurance. Now, life insurance isn't just kind of necessarily a straightforward product where you see the price tag and that's what you get. Life insurance has an application process, and the prices that you're quoting or getting quoted online are kind of like the most likely price they think you'll get. So if you're like a healthy young individual, and you do a quote, you're probably going to get the quote that they priced online. But there are a few factors that can give you different scenarios and different prices. One is being a smoker. Smokers pay substantially higher life insurance premiums than non-smokers. There's also differences in age. The closer you are to your average life expectancy in age, also known as being older, the older you are, the more life insurance premiums you are going to pay. Younger people, life insurance is fairly cheap. Older people, life insurance is very expensive. The other issue with life insurance is health circumstances. So if you have a health issue, the insurance company could come back and say, we want you to pay more than the average person, or they could decline you for coverage, and then you have to look to a specialty insurer. Now, most brokers have a whole system for this, or they have carriers that they work with regularly. You know, I do this for clients. I'm a life insurance broker. You have options if you get declined by the first insurance company. So you don't necessarily have to stress too much about it, but it is something that does happen on a regular basis. The last thing for life insurance is that usually women are less expensive than men because women tend to live longer, and that's just the way the calculations work. So next up, we're going to talk about how do you determine how much life insurance you need, or like what are the common strategies or the common tools that people use to determine how much life insurance they need. So there's a couple rules of thumb, and then there's also what I do as a professional broker. So one of the rules of thumb is using 10 to 15 times your salary. I don't like this because it's very unspecific. It doesn't take into account your family situations. And in many times you end up getting the wrong number. So, you know, I don't usually recommend it, but it's kind of a good maybe litmus test to see, am I on the right track, or maybe am I in the ballpark? The other one that we normally do is a more in-depth analysis where we look at all of a person's assets. So all your investment accounts, your real estate and everything. We take a look at your debts. So things like mortgages, credit cards, lines of credits, car loans. We also look at future expenses. So things like, you know, kids' education. And then also what would it cost to replace your income if you were to pass away, right? Because your household is going to lose income. And we do also, when we're going through your assets and things like that, we also do a quick scan and kind of say, which of these assets are you actually likely to sell if something were to happen to you? One of the common things that you hear sometimes is like, you know, I'll liquidate or I'll sell all of my RSPs, or I'll just sell my house and give that, and I don't need life insurance. A lot of times in these stressful situations, that is not what is happening. We often see people staying in their homes, they're not wanting to liquidate RSPs. You know, maybe they're moving, but you know, you got to remember that people need time to grieve. And there's also sometimes assumptions that people will get remarried and things like that, or they'll find a way to fix their financial situation. I can tell you from experience, it doesn't always happen. And in some cases, the life insurance really saves a family, or in some cases is what actually allows your spouse to be able to retire later. Now, the final couple steps is going to be how do you purchase life insurance and how do you do quotes. So how you generally purchase life insurance is through a broker or through an agent. So you can contact a life insurance company. There's quite a few out there, and they'll put you in touch with one of their agents and, you know, sell you a policy. You can also go through a broker, someone like myself. I've got contracts with a lot of the major, I think most of the major insurance companies in Canada. And we go through and we find you, you know, kind of the best product, what's the cheapest rate. The final solution, which is a little bit newer, is buying directly online. You know, it's not necessarily a bad solution. You might not get the best advice. You're kind of, usually with these tools, you're relying on yourself to make the decisions, on yourself to do the needs analysis. A lot of the websites will have tools, but again, you know, without having a lot of experience, how do you know you're picking the right number? Usually a good broker will also be able to find you, you know, an insurance policy that will cost, you know, just as much as one of the online tools that are, you know, claiming to save you money. There are also a few ways to get free quotes online. So, you know, there's websites like WinQuote, Term for Sale. Sometimes an advisor's website will have quotes. We don't normally do that. We normally have a call with people and we'll get some information. You know, it's usually not hard to get a life insurance quote. The main thing is trying to determine how much actual insurance do you need. Now, there are actually some pretty great tools out there to help you determine how much insurance you need that aren't from a broker and aren't from a website trying to actually sell you a life insurance policy. You can do a Google for a life insurance needs analysis, and there'll be a bunch of different tools and websites to help you. The Government of Canada, the CRA website actually has a life insurance calculator, although it's not my favorite. There's also a pretty great tool called lifehappens.org, which is a non-for-profit website that kind of goes through how important life insurance is, and also has a life insurance needs calculator on there. And you can know that because it's a non-profit and they're not selling you anything, they're not necessarily biased. So I want to say thank you for watching, and I also want to say thank you to the Peterborough Public Library for putting on this series, or this financial literacy series, for everybody in Peterborough. It's a really great opportunity. I'm very passionate about financial literacy, and it's a really great thing for everybody in the community. My name is John, and I'm the president of a company called Retirement Income Group. And if you have questions, you can feel free to look me up online, give me a quick Google, and send me a note, and I'd be happy to answer any questions that you have. Thanks, and have a great day.